Welcome to FX Signal Team. Today, we are going to discussing the 3 tips for trendline trading. Connect swing lows to swing lows or swing highs to swing highs. We want to draw a line connecting either 2 or more swing lows or 2 or more swing highs. For those unfamiliar with the term swing highs lows, we simply mean the peaks and valleys created with zigzagging prices. Once we connect peaks with other peaks or valleys with other valleys, we want to see the line not being broken by any candle between those 2 points. Draw unbroken trend lines. In the first image, you will find that we successfully drew a line connecting 2 swing lows, but between those 2 points, the price broke through the line that we drew. This invalidates the trend line. What we want is what we see in the second image, 2 swing lows connected together by a line unbroken by price. This is a valid trend line that is ready to be projected out into the future. Next time price gets near this trend line, we will want to look for a bounce. A convenient way of trading this type of setup is using entry orders. Entry orders can be set to get you into a trade at a specific price. I like to set my entry orders several pips above a support trend line or several pips below a resistance trend line. That way, if the price reacts before getting to the trend line, I still have a chance at getting into a trade. You have to remember that if there are many traders looking at the same price to act as support resistance, there is a chance that orders will be stacked around these levels. If there are enough orders keeping the price from getting to the trend line, the price might not get to your order if it's placed directly on it. The more connecting points, the better. You have probably noticed that I have referenced 2 or more highs lows make up a trend line. The reason I mention or more is because trend lines can continue to be relevant far out into the future and can be bounced off of several times. As a general rule of thumb, the more times a trend line has been hit and respected with a bounce, the more important the market believes that it is. Like anything, however, trend lines cannot last forever, so after a multitude of bounces, one has to expect a break to eventually occur. The first reason this is true is that you can draw a line connecting any 2 points on a chart. Just because there were 2 distinct highs in the last 50 bars and you drew a line between them does not actually mean the line is a valid trend line. What you would have is a potential trend line. To truly validate a trend line, you need to see the price actually react from a line projected from a trend line drawn based off of 2 prior points. Essentially, a third high-low is needed to truly solidify a trend line. Once you have this, you can then feel better about looking for opportunities to exploit the market when price reaches the trend line again. While having a third high-low is recommended before looking for a trade, it is not required. Validate trend lines. Each time you see the price bounce off the same line, the more likely it is that others are watching it too and are playing the same game you are. This could help you get several good entries in a row, but remember, trend lines would not last forever. So you want to make sure you set proper stop losses to get you out quickly if the support resistance trend line eventually fails. Buy bullish trend lines, sell bearish trend lines. The trend is your friend. This steadfast rule also applies to trading trend lines. For experienced traders, this basically means we should only look to buy at bullish support lines and sell at bearish resistance lines. Buying bullish support trend lines. An upward slanting bullish trend line means the price has been trending up, so we want to look for buying opportunities. Buying opportunities occur when the price drops down and comes close to the trend line that has caused upward bounces before. Selling bearish resistance trend lines. A downward slanting bearish trend line means the price has been trending down, so we want to look for selling opportunities. Selling opportunities occur when the price moves up and comes close to the trend line that has caused downward bounces before.